Hi there, welcome to kneppyinvests. It is the 18th of September, only 2 more weeks left of the September quarter, which means we will start seeing the first Appendix forces for the September quarter released in about 3 weeks. We might have to wait about a week into September before we see the first one drop. That means I only have about 3 weeks to finish my mission in doing a video on every single company that did achieve an operational cash flow positive June quarter. Fortunately, I only have 2 standalone videos to do, one on Mosaic Brands and another one on Buddy Technologies. And I have 7 group videos to do, including this one. Now, I'm not really liking these group videos all that much, so 100% likelihood that I would not continue this moving into the September quarter. But there is one benefit, one positive of doing these group videos, and that is I have found a few companies that have tickled my fancy by a little bit. And I just want to do a little bit more research on these companies. And that is true for one of the companies they'll be featuring in this video. The other 2 companies in this video, or 2 of the other companies in this video, are gold producers. Another one is an engineering services company. And the company that I did look at and I found interesting was a company that is in Kaolin and Silica. They have Kaolin and Silica projects in Western Australia. And the very fact that they have a Kaolin project really intrigued me because I have no idea what Kaolin is. So that's the main reason I want to do a little bit more research on this company. And that company is Suvo Strategic Metals. But that's not the first company we'll be looking at in this video. And that honor belongs to Catalyst Metals, ticker code CYL. This is a gold exploration company. Up until only gold exploration, up until January of this year, when they actually did acquire a gold producing mine called Henty, which is in Tasmania. And Henty Gold Mine is operational cash flow positive, hence why I'm doing this video. So I only have 2 quarters of history here. And only 6 months of data. So the receipts from customers for the year to date of 27.9 million is actually only for 6 months, maybe even less than that, because they acquired the mine, if I remember correctly, about 21st of January. So really only about 2 months in the first quarter and 3 months in the second quarter. That's why the receipts from customers in the June quarter was a little bit higher than the March quarter. Not only do they sell gold or produce gold, they also produce silver as well. And this mine is operational cash flow positive by $4.8 million for the quarter and $6.3 million for the financial year. The market cap of Catalyst Metals is $185 million at $1.88, and they do have a fair bit of cash on hand, $33.5 million, and they did spend $4.1 million on capital expenditure and exploration. And because the money spent on capital expenditure and exploration was fairly high and a little bit higher when you do include other costs, then the cash flow from operations, the cash in the business actually did go backwards for the quarter. Because Catalyst Metals only acquired their gold producing mine in January of this year, we don't have much financial data to look at, so I'm going to skip that and go straight to the charts here. In fact, when you do look at the weekly chart for Catalyst, which goes back to 2015 in this chart, we do see a really nice uptrend from 2016 to 2020, just around the COVID-19 financial panic, when the share price increased from about 25 cents to a high of $3.25, which was reached just before COVID-19 financial panic. And then just after, during the COVID-19 financial panic, the share price of Catalyst fell to $1.75. But since that high just after the panic, COVID-19 panic, we have seen the share price moving down over the past, we'll call that 18 months or so. And the share price has fallen from $3.37, which was the all-time high for this company. Well, maybe not the all-time high, but definitely a recent high, all the way down to current share price of $1.88. And right now, the most intriguing thing about Catalyst Metals is the share price right now is around the lows we saw during the COVID-19 financial panic. And we've seen that share price reach about 3 or 4 times in the past few months. And every single time it gets to this price, it bounces off and then moves back towards this price. So this is a level of support that has been tested 4 times in the past 6 months. And the more times it gets tested, the more likely it is going to fall through. So there is a chance right now, because we're right on it, it might fall through this level of support. So keep an eye on Catalyst Metals, because this mine that they did acquire has only been in production for this company, for Catalyst Metals, since January of this year. And I am a little bit eager to see how their September quarter results come out as. So if we do see this company even more operational cash flow positive, this could be a nice intriguing buy, particularly if the share price hovers around the current levels. Second company on the list today is Tribune Resources. I'm not going to talk much about this company because I've already talked about Rand Mining in another video, and Tribune and Rand Mining are sort of joined at the hip because they do have a joint venture in at least one mine. So Tribune Resources, ticker code TBR, market cap $289 million. That's at $5.51. So not a lot of shares on issue with this company. Cash receipts for the year, $178 million, and operating cash flow positive $22 million for the year, but only $1 million for the June quarter. And they only have $4.2 million of cash at the end of the financial year, which was down $2.5 million from the start of the quarter. And one of the things they did spend money on was a share buyback to the tune of $4.9 million. I think even Rand Mining did that as well. So another more proof that Rand Mining and this company are joined at the hip. They actually do the same thing when it comes to share buybacks. Maybe there's a reason behind that, but I haven't really delved deeply or too deeply into doing any research in regards to Tribune Resources at all, because this company doesn't interest me all that much. And maybe it should when you look at the financial history of Tribune Resources, looking at revenue here and operating cash flow going back to 2010. We do see an uptrend in revenue from 2010 to 2019, very similar than Rand Mining. And then we did see a bit of a drop-off in 2020, and that's because of the seismic event in regards to one of their mines. And I talked about that with Rand Mining video, and we did see revenue drop off because of that. Not as significant as Rand Mining, because Rand Mining almost fell to zero in that financial year, but operating cash flow fell from $227.6 million to $14.7 million. So this company was producing prodigious amounts of cash in 2019, and that's fallen away. And it does look like the mining activities have recovered slightly based off the financial year 21 results, but nothing like we saw in 2019. One of the other reasons I'm not that interested in Tribune Resources is just the chart. Share price is really not doing anything. This is the weekly chart going back to 2012. We don't see any uptrend at all during this time period. In fact, the share price has been oscillating between about $3.60 and we'll say $8.80. We saw a massive spike, a 1-week spike in 2018, and then the share price pulled back almost immediately. So maybe the best time to buy Tribune Resources is when the share price gets below about $4, and then when the share price gets above $8, you sell out for a nice little profit. So that might be the only reason you buy and sell this company. On to the company that did intrigued me when I saw what they do. Even the name intrigues me. Suvo Strategic Metals. This is a Kaolin and Silica exploration company. They also have the only hydrous processing kaolin plant in Australia. That's, I believe, if I remember correctly, that's 40 kilometers west of Ballarat. The two projects, the Kaolin and Silica projects, are both in Western Australia. The White Knight Kaolin project is 210 kilometres north of Perth. Now, when I heard they are or have a Kaolin project, that did interest me because I have no idea what Kaolin is. And the little bit of research I've done on this company did shed some light on what kaolin is. It is a clay first discovered in the Kaolin district or Kaolin area in China. And the two largest applications for kaolin are coating of paper to hide the strands and the production of high-grade ceramic products. They also mention in regards to silica on their website, there is currently a global shortage of silica sand, but that doesn't mean good things, because typically if there is a shortage of a commodity, you get a lot of companies, a lot of explorers rushing to find that commodity because there is a shortage. And then a few years down the track, instead of there being a shortage, there is an oversupply, and then the price of that commodity takes a massive hit. So that could happen with silica. I don't know. I haven't done a lot of research on that at all. Now, if you do a little bit of research on Suvo Strategic Minerals, you might tell you that the company has been around since about 2011. However, there was another company called Ultracharge Limited, and Ultracharge Limited weren't being successful with their business plan, and they decided to take a different track, and Ultracharge Limited became Suvo in the middle of 2020. So really, Suvo Strategic Minerals has only been on the ASX for about a year, and that's a high kaolin processing plant in or near Ballarat is the reason why they do have receipts from customers, and the reason why they are operational cash flow positive by 584,000 in the June quarter. So this company is producing cash in operations. The market cap of this company, 85 million at 15 cents. They do have $5 million of cash, and they also spent $1.1 million on an acquisition. So I want to do a little bit more research on this company, particularly around the two projects, Kaolin project, how long before we see that in production, that sort of thing. This is really the only company in this list today that I was a little bit excited about. Catalyst Metals did excite me a touch, just because they're in production. They've only been in production for about 8 months, and I just want to see how they're going in the September quarter. But Suvo is a little bit different. I want to understand more about kaolin and about silica. The main reason I know Suvo was ultracharged back in 2019 to middle of 2020, because when I brought up the chart for Suvo Strategic Metals, I noticed there was a massive spike in volume towards the middle of 2020. And to understand that massive spike in volume, I just went to the announcements of the company. And when I went to Appendix 4C back in the middle of 2020, it came up as ultracharge. So they changed their business plan. They became Suvo Strategic Metals. I'm not sure if it was a backdoor listing. More than likely it was. And ever since they became Suvo Strategic Minerals, the share price has shot up. So back then, when they did backdoor list, if they did, the share price was around 2.5 to 3.5 cents, and now it's 16 cents. So we have seen a little bit of interest in this company over the past year, and that's why we've seen the share price rise. But if you do take a look at the past 9 months since the start of this year, the share price has been going sideways. Again, just like Tribune Resources, it's been oscillating up and down just like a wave. And what you want to see here is a nice upwards trend in the share price, and we're not really seeing that right now. In fact, we're actually seeing the volume drop down over the past 5 or 6 months. I'd like to see a little bit more volume coming into the trading of this company, which would tell me that there is interest in Suvo Strategic Minerals. Final company today is EVZ Ltd, Engineering the Future, which is very apt for this company because this is an engineering services company with 3 operational divisions: engineering, power, and water. And of course, the ticker code for EVZ is EVZ. Market cap is not too stretched for EVZ, only $16 million at 16 cents. Cash receipts, $60 million for the financial year. Operating cash flow positive for the financial year, $1.7 million. And for the June quarter, $302,000. So not highly operational cash flow positive, but the market cap is not too high either. They started the quarter with $5.3 million in cash and finished it with 4. And the reason cash came down during the quarter was because they repaid debt by 1.4 million. So even though they're operational cash flow positive, they did lose cash because they repaid debt, but that's a good thing in my books. I prefer companies like this not to have too much debt on their books, because a lot of times the interest rates they have to pay on the debt can be quite high, even though we're in an interest or low interest rate environment. Now to the reason why I'm not that excited about EVZ Ltd. When we look at the revenue and operating cash flow for this company over the past 10 years, we don't see any upwards trend in revenue. I would say it's almost exactly flat. In fact, if you compare the revenue in 2011, which was 65.96 million, it was identical to the revenue in 2020, which was 66.22 million. And that's the main reason I'm not excited about this company, because this company is not growing. And then you look at the operational cash flow of this company, and it oscillates between being operational cash flow positive some years and operational cash flow negative some years. And that's exactly why I have no interest in this company, even though there might be some value at $16 million. But if it's not growing, there is a chance that that market cap won't grow either. So no point in buying in this company at this point in time, unless we start to see revenue and operating cash flow grow. And to be frank with you, when we look at the weekly chart going back 10 years, nothing here to get excited about either. In fact, probably quite the opposite. Probably the only time you might get a little bit excited about EVZ Ltd is if the share price gets towards 7.5 cents, which it has been reached that level a couple of times in the past, back in 2016 and then again in 2020. And right now the share price is at 17 cents. So about double sort of the share price you might want to buy into this company. Now, when you do look at the weekly chart and the volume over the past 9 to 10 months, we are seeing the share price move into an uptrend, and we have seen an increase in volume during that time period as well. So someone in the market is getting excited about this company, particularly when you compare the volume over the past 9 months to any period in the past. Very low volume in the past. So someone is getting excited about EVZ. So there is potential we might see revenue growing. Maybe they know some things that I just don't know, simply because I haven't done too much research in this company because of the things I've already stated in this video. That is all I have for this June quarterly report for these 4 companies that were operational cash flow positive for the June quarter. If you know a little bit more about these companies than I do, I'd love to hear your thoughts, your feedback on these companies, and maybe try to entice me to do a little bit more research on any of these 4, particularly Suvo Strategic Metals. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.